Please remember that this matter should be viewed as a solicitation to trade. Trading futures and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Optimus Futures LLC is not affiliated with, nor does it endorse any trading system, methodologies, newsletter, or similar service. We urge you to conduct your own due diligence. Now, here's your host, independent broker veteran and CEO of Optimus Futures, Matt Zimberg.
Hi guys, this is Matt from Optimus Futures, and today I'm going to talk about how to choose a method, how to stick with a method, and when to change a method. So, when you choose a method, it has to be based on your skills. That's the first thing I would go by. You have to choose a method that you feel comfortable analyzing. So let me give you an example. Some people are very visual. They could be looking for patterns in the market. They could draw lines, support, resistance, or other patterns that they see that the market repeats, and they have just the ability to do that, just a good visual eye. There are people who like to concentrate on microanalysis, for example, of order flow. Some people like to look at fundamentals. So whatever you choose, you have to choose a method that you're comfortable with analyzing. Majority of people, unfortunately, choose method which is outside their skill set, meaning that they choose something that they are not that good in analyzing it, meaning that they go with what's popular, or somebody told them about it, or they read online. There is no method which is better than another method. After doing this for so long, I cannot tell you that somebody who's a swing trader is better than a day trader, or somebody who uses some sort of a statistical analysis to evaluate is better than a pattern trader. So when I'm talking about skill set, I'm just saying you have to stay within an area that you feel comfortable with in terms of analyzing. And that, I think, in my opinion, would be the best decision that you would make as far as making a decision about a method. I know it's not easy. I know sometimes you have to look at multiple methods, multiple systems in order to choose what's right for you. But at the end of the day, it always should start from the question of, what am I good at? What can I apply within my skill set that will serve me long term? That's number one. Number two, realize the risks behind your method. What are the risks that you're looking at? Let me give you an example. In my opinion, somebody who's a swing trader and trades, for example, a number of sessions or a number of weeks and takes overnight positions could potentially have a larger drawdown than somebody who's a day trader. And I say potentially because even in day trading you can have drawdowns. But the nature of having overnight exposure might give a lot of surprises, of course, from the Asian sessions, from the London session, and so forth. So when you get into a method, find out what's the downside of the method. What are you going to encounter in that method that most people don't want to address? And what they don't want to address is the drawdown and the risk side. Unfortunately, the majority of us look only at the reward side. And I say, look, start with the risk. Start with a method you feel comfortable. Start looking at the risk. That's where the secret is. Let's look at the reward side of the method. You choose the reward side. You choose now to see if this analysis or the method you chose, if it could be consistent and how consistent it is. Consistency is the key. And what I mean by consistency, I don't mean that the system has to be consistently profitable every day or every week. You check where the consistency exists. Let me give you an example. You can choose a method that for 3 months, for example, will not give you any profit. But during volatility, it will produce more, right? That's one thing that you want to look at. Where is the consistency for profits in this method? A lot of us, unfortunately, and I say unfortunately, not because I want to criticize anybody, it's because it's our nature. Our nature is to look at the good things, at the reward. That's why we're in the markets. But we have to be objective when we analyze things, and we have to choose a method that we really understand what we're getting into. And the reason we want to understand what we're getting into is because we don't want to change methods like shoes. If you choose a method, you have to stick with it for a long time. Methods can be broken? Absolutely. Can systems fall apart? Absolutely. But if you are objectively analyzing a system, if you look back at the drawdowns that it can produce, if you look at the consistency of the system, then you know that the system still working or not working while you trade. Let me give you an example. Let's say that you chose a system of day trading. The system itself goes in every day, let's say between 12 and 3 o'clock. You chose the time period. I chose it randomly. There's a lot of traders who trade all day. Some trade the first hour, the last hour. I just chose randomly 12 to 3 o'clock. So let's say you go in 12 to 3 o'clock and you're looking back now with the charts at those time zones, okay? And you're seeing the results of your method. You might realize that for 2 weeks, 3 weeks, or 4 weeks, there might be periods that there's no returns. And all of a sudden, there are days with exceptional returns, okay? So let me just repeat that again. You have prolonged periods of lackluster with very short periods of outstanding performance. And it's very important to observe patterns like that and understand if they repeat. Why? Because when you go live, majority of traders dump systems because it doesn't bring them profits right away, because it goes into a drawdown. So let's assume randomly again, you start with a $25,000 account. Let's say that your first month was not that successful. Let's say you lost 1,000, okay? Now you're sitting and debating, do I drop the system? Is it not a good system? Okay, you could drop the system. But if you look back at your backtesting results or the charts or anything else, and you saw that the drawdown on the system is, let's say, $5,000, then you know what? You have to stick with it. If your losses exceed $5,000, then you have to ask yourself, okay, is the method good? Is there anything that I could do to improve it or dump it? But that would be a better decision to do it than just in the first month or the first week of trading decide that you want to change something else. And that's what a lot of people do. They open accounts, they start trading, then it doesn't go well, and then they might go to a model again and look at backtested results to test something else. So the key is to be really, really objective in your analysis prior to trading the system. Now, I've used a lot of negative examples, but let me tell you about a positive example that could work as well in you evaluating things. Let's assume that you're a day trader and you expect a certain profit on your model per day. Randomly, I'm choosing a number here. Let's say it's $500. Let's say the first month in your trading, you're actually averaging $1,000 a day instead of $500. So your model said 500, now you're going to trading and you actually 1,000. So you're going to obviously pat yourself on the shoulder and you're going to say, I'm a phenomenal trader. But here's another scenario that you should look at, or another angle that you should look at. You should say, what happened in the market that it gives me double the reward? Is the volatility double? Is something changed in the market that gives me this reward? If something doesn't go your way the way you expected, or it goes more in a positive direction, if it's not what you expected, you have to analyze it and see if it's within the model. That's what you have to analyze. And so essentially, if, for example, your profits are double than what you expected, then you have to say, okay, what happens if the volatility, dies off? Did I test my method during a period that the volatility was very low and now the volatility is higher? Maybe I should take the number of positions down, not to encounter bigger drawdowns when the volatility falls off. Essentially, what I'm trying to say is this, that anything that you analyze or any approach to the markets that you have has to be objective and not based on a gut feeling. And you have to know your method before you approach the market. Few words of advice. Start with something that you feel comfortable with, as I mentioned. Trade within your own risk tolerance. Choose methods that you're comfortable in terms of your risk capital, risk tolerance, and your skill. And that will build potentially a foundation for better trading in the future. I'd love to have you as a customer at Optimus Futures. If you have any questions, you can always go to our website to www.optimusfutures.com. You can call me. It's 1-800-771-6748. If you need advice or if you have any questions, would love to talk to you. I wish you a good and profitable day, and looking forward for future podcasts. Take care, guys.
Please remember that this matter should be viewed as a solicitation to trade. Trading futures and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Optimus Futures LLC is not affiliated with, nor does it endorse any trading system, methodologies, newsletter, or similar service. We urge you to conduct your own due diligence.